How important is it to look for high reward to risk trades as a Forex trader? And how does that impact your overall profit? So let's talk about that and more right now. Hi Forex traders, Andrew Mitchem here, the owner of the Forex Trading Coach. Today is video and podcast number 204, and I want to talk about a really important subject. I've had an email come through here from Robert over in the US, and Robert said to me, Andrew, look, I keep getting told to go for small incremental gains per day instead of hitting the home runs. I can tell Robert's from the US because he mentioned home runs, and he said, apologise for not using cricket terminology. So he said to me, look, I keep doing this, and the problem is that where I put my stop loss, it doesn't allow me a favourable reward to risk. So therefore I'm making lots of small gains and getting a few losing trades. And of course the losing trades outdo all the gains you made. And it's quite a common problem. So I get people say to me, they say, Andrew, look, how can I get an 80% win rate, a strike rate, people like to call it, within my trading? And I go, well, why do you want to achieve an 80 or 90% win rate? Yes, on paper, it sounds fantastic to get all these winning trades. But the reality is, if you have a system like that, in most cases, you're going to find that if you have that one or two losing trades, especially if you get them back to back, that wipes out all your gains that you've just made. And Robert was finding exactly the same problem from the advice that he was given. And he said to me, hey, Andrew, look, can you give me some new advice, I suppose, or what's your take on this? And because how do I overcome the problem? So to me, the answer is generally to get onto the slightly longer time frame charts. So I find that generally the higher the time frame chart, the higher the reward to risk I can get off of those charts and off of those trades. And there are several reasons. Spread really doesn't pay much of it plays very little importance on a longer time frame chart. Of course, if you're taking trades all the time on 5 or 15 minute time frame charts, spread can soon eat into your profits. But if you're taking trades, like maybe 1 or 2 trades a day on a longer time frame chart, spread really isn't that sort of significant a factor, really. If you have a longer time frame chart, you can generally place your stop loss for a safety level, like where it should be for a reason, not just because it's X number of pips away. On most cases, that is a very, very bad way of trading because, if you pick 50 pips as an example, 50 pips on the Euro US is completely different to 50 pips on the Euro Yen or 50 pips on the Euro Franc even, you get pairs that move a lot and you get pairs that move a little bit. And so picking the same pip stop loss is not a great way of trading. And of course, different time frames require, different levels. So I like to say, let's put your stop loss at a level that if that stop loss gets stopped out, you accept you got the trade wrong, the market went against you, whatever the reason, but you accept that you lose on that trade. If you forget about making pips and make that a percentage of your account, if it gets stopped out, that also helps you. So the important thing is to try and look for trades that have a safe level for a stop loss and also give you plenty of upside potential. Now, if I'm trading on 4-hour charts or 6 or 12 or daily or weekly, generally as I get higher time frames, then generally the reward to risk gets higher. But I like to look for trades that have a 2-to-1 reward to risk, right through to some trades have up to a 5-to-1 reward to risk. Most would be between a 2 and a 3-to-1 reward to risk, most trades that I take. So that means if I'm risking half of 1% of my trade of my account, on any one particular trade, if I get stopped out, I lose half of 1%. If I have a 2-to-1 reward to risk trade, I make 1% if it hits the full profit. If it's a 3-to-1, I make 1.5% gain. If it's a 4-to-1 reward to risk trade, I make 2% gain by risking 0.5%. So you can see in that case, with a 4-to-1 trade, I could lose, let's say, 3 trades and I lose 1.5% total. Yet my 4th trade's a winning trade and I make 2%, so therefore I'm net plus 0.5%. Now that example is only with a 25% win rate. Now, of course, I like to get a higher win rate than that, but you can see in that example, you're losing 75% of the time, but you're still making money. Yet you get people who win 75% of the time or higher, and they lose money. So you can see how very, very important high reward to risk trades are. So to answer your question there, Robert, it's generally the suggestion from me would be to go onto the higher time frame charts. You see, you can't trade a 15-minute time frame and put a small stop on there and aim for this massive reward. Sometimes, yes, you will get there, but not that often, because the shorter the time frame, the more the noise, the more the the up and down movement within the price. And to go and pick the absolute top or absolute bottom and have your stop loss, at that perfect level and your profit target at that perfect level and get that perfect move, the shorter time frames, it's very hard to do that consistently. Whereas the longer time frames you get, you accept you're in the trade for longer, you have news events going on, you have your trade in potentially overnight, you get all sorts of things happening within different trading sessions, but because you've got a bigger stop loss, you give that trade and that overall longer term trend time to get to your profit target. It's a lot less stress involved. It's a lot higher reward to risk, which generally means you make more money. And ultimately, that's what we're trying to do. So I hope that helps answer your question there, Robert. One last final thing. This Friday, I'm holding a Black Friday sale. If you'd like to get in and have access to my course at an exceptionally low rate, click on the link below this video and I'll have a link there that will take you through to the Black Friday page. It's only a 48-hour sale. It's pretty much, I've been looking at just the US and Canadian traders, because it's Black Friday is generally something that affects people from those countries, but it's available to anybody. So wherever you are in the world, if you're interested in getting a great deal and having a Black Friday deal, a special way of getting onto my course at a massively discounted rate, click on the link below this video and it will be this Friday. So look forward to helping you, and if you have any questions like Robert's, send them through to me, Andrew at theforextradingcoach.com, and I'll get those questions answered for you. Have a great weekend. See you next week.